Hi everybody, it's FIBO Group and you are watching to the Market Watch review. While equities appeared to be driving the other capital markets, yesterday's bullwhip was taken by the debt market. Equities fell as a result of the surge in U.S. rates. This led to a dollar rally and a reverse turn. Due to more than 3% losses in Nikkei or Kospi, the MSCI Asia Pacific Index fell to its lowest level since late 2020. The gains in the US dollar are being extended. Canadian dollars and Norwegian krone are most resilient, possibly due to anticipated rate movements. Today's low of $1,810 was achieved after gold had moved above $1,850 on Tuesday. Today's close to $1,805 is the 200-day moving average. The March WTI index is unchanged, consolidating yesterday's two-year high of $88. Asian Pacific market. The BOJ minutes of the meeting earlier in the month showed that there was a strong desire to counter speculation about policy normalization. Governor Kuroda strongly rejected such speculation in his press conference, stating that it was absolutely not. The dollar is enjoying a back-to-back gain against yen thanks to rising U.S. rates. This has happened in the last few sessions of trading this year. Remember that the dollar fell to JPY 113.50 Monday's low amid the equity markets. It has now risen above 115.00 for only the 8th time in 8 sessions. Next week, the Reserve Bank of Australia will meet, and it is expected that they will recognize the possibility of a rate increase this year. This has been a resistance so far. It is likely to confirm that it has stopped buying bonds. The Australian dollar fell below 0.7065 today after it was reverted to $0.7200 Monday and yesterday. Market of Euro. The European economy is light, keeping the focus on politics. Today marks a new phase in Italy's selection process of the next president. A simple majority is required to start today's vote. A result is possible today and tomorrow. The euro was at $1.1485 on January 14 and has since returned to the same level as last November's low of $1.1185. Sterling is also falling another leg. It is now at $1.34. This corresponds to the 61.8% return of the rally from 20 December low of $1.3175 to mid-January high of nearly $1.3750. Market of America. The Fed's statement was not the reason for market turmoil. It was mostly as expected. Powell's press conference was the moment when risk appetites began to decline in a significant way. The great discounting mechanism revealed that the chair was sending out a hawkish message. He didn't rule out rate increases at all meetings or a bigger move. The U.S. has a lot of economic reports, but Q4 GDP is the most important. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.